Happy Sunday, everybody. Welcome to another edition of Money Church. This is the time of the, I messed that all up. This is the day we talk about investments. We talk about how to take $1 and make it into two. In particular, today we are talking about ROE, return on investment, which is all about if you can take $1 and make it into
return on equity. What is wrong with you this morning, man?
Yeah, you on Kamari time this morning, bro.
Thanks for stepping on. Thanks for stepping on that.
I mean, listen, I made it actually better
eventually. I would have cleaned it up eventually, right? But thank you for embarrassing me, sir. But good morning, everyone.
Hello, good morning.
We're talking about return on equity.
Damn.
Tell you,
First of all, you said F the hooks, all right, and now you just anyway, man. Good morning, beloved.
I don't think I like Jimmy's morning, Corey.
That's what we on. That's what we on this morning.
He was slandering me for the great musical choice I be having, trying to educate this.
Hey, listen, man. Listen, that was my favorite part of yesterday, man. Y'all. Again, so, Corey, man.
Clearly, you didn't watch the video. You ain't watched the video yet, did you?
Which one?
The recap.
I did watch it.
Oh, so you saw what I did, right?
I definitely saw what you did. I was there for the whole thing.
Hey, listen,
but in all seriousness, y'all, we're talking about return on equity. We're talking about Warren Buffett's secret sauce. And Jimmy's going to break down. He's got a great presentation. I always love to salute my brother, give him props, unlike some of us.
Yo, it's shading you even saying that, but okay, I appreciate it though. I catch everything, but it's shading you saying that. But thank you anyway, beloved.
So be it. You
know what I'm saying? CLIP. All right, listen though, real quick though, I do want to say, yesterday was another success for us. I want to say thank you to all the parents again. And I want to thank our sister Rachel Hannibal, the award-winning financial educator Rachel Hannibal. I want to thank the whole team, man, because it's a whole team. It's not just us three. We got a whole team that pulls up every Saturday to make sure that things go off without a hitch. We got parents that stay and help out, volunteers, people that pull up to volunteer. We got all kinds of stuff that happens, and I just want to say thank you for that. Also, salute to our brother Don Johnson, man. Don Johnson allowed us to give some dope prizes yesterday. You know what I'm saying? Kids was excited. Philadelphia Youth Basketball, the 6-man center. So everything is coming together. This has been our best camp ever. The kids that show up online every week, participating online as well. So I'm just excited and looking forward to see how we continue to build this thing out, because we got some ideas about, after the camp, how we're going to keep the energy going and keep the community work going. So I want to start with that. Sunday is our class day, so we do have a class lined up, as Kamari already put out, although it's return on equity, not return on investment, as Kamari said. But we still do have a beautiful class going on that was going to happen this morning. So, we already got a comment. We had a comment before we even went live this morning, man.
That was wild. Wild.
Someone saw the title and was like, and by the way, I actually like this comment. I know Kamari felt some type of way about it. I'm gonna tell you why.
I don't feel any type of way about it. It is what it is.
Mr. Right? I was.
Good morning, Mr. If you're still here, by the way.
First I saw it, I thought it was Mr. Man. Shout out to Philly's Most Wanted. Underrated rap duo. You know what I'm saying? Bubonic and Mr. Man.
I had them at a party at one time.
Pull up on my 5 and shoot your J30. Anyway, so it says insurance underwriting scams. Making sure premiums never exceed claims and collecting premiums to invest in dividend-bearing stocks that compounded over decades. So my take on this specific comment is the title of this episode is Return on Equity, the wealth metric that Warren Buffett swears by. So I think that, from using deductive reasoning, that Mr. Mystery is saying basically that Warren Buffett's secret sauce really is that he's an insurance scammer.
He called my man Mr. Atlanta.
Which is
isn't everybody insurance? Isn't everybody insurance a scammer though? Doesn't everybody run that same thing?
That leads to a different conversation. That's probably a Wednesday or Friday conversation. But I found it funny because we're going to talk about why Warren Buffett likes this, and everybody loves Warren Buffett. But Warren Buffett is an interesting character because he's put himself in the space where he, you know, from marketing, where he's like everyone's granddad, and it's like, you know, but sometimes people call a spade in terms of what they see or what they believe. Call my man an insurance scammer. So I found that to be funny. So shout out to Mr. Mister for the comment. We appreciate all comments. We got people watching live, and for those that are watching live, leave us a comment. Let us know who's here. You know, show us some love. You know, so you know we're gonna go from there, man. But what else y'all thinking, man? What y'all thinking after yesterday, man?
I think you're a hater, but you know, other than that.
besides Kamari thinking that Jimmy's a hater, I think we need to find a way to connect completely during the school year. That's the thing. Like, I just want to continue to work. Like, it's the work is so powerful that I just don't want to. You know, 5 weeks of camp is great, but I don't want to stop. You know what I mean? I want to do year-round work of this type in the community, because we do year-round work, but I'm talking about of this type in the community. So that's what I'm thinking.
I don't want to. So I want to share what I'm thinking after camp's over. I'm going to share.
Okay. You got some. Okay. All right. So you got some super secret thoughts that you want to share?
No, they're not. I mean, I've shared them already publicly, but I don't want to keep harping on that, because I do believe in energy, and I do believe in positivity at all times. So I'll just say this: the value that we're giving, that we're delivering, everybody should be bringing their parents there. We should be booked. Like I said, I've talked about this before, and I've talked about it publicly, right? I mean, we should be booked out to capacity. Everybody will benefit from this, whether it's the content we're talking about, whether it's the relationships with the other students, whether it's the relationships with us, it's the relationships with the other parents.
So here's what's interesting, right? And, you know, it was a part of a conversation that me, you, and Rachel were having yesterday, right? In terms of how people see value and how people, like, you know, all right, let me keep it real, Stack, man. Let's have a conversation.
So we're not going over the presentation today, I see.
No, we are. I just want to say a couple of things based upon what you said, right? All right, so I get it, but I think I understand why you say what you said, but I think I've come to a different place, right? You can't save everybody. I know, I get it, but you can't save everybody. And I'm gonna tell you why I came to this, right?
And I agree with that. I
was having a conversation with my wife about this. Here's why, right? When you look at the kids that are there, we got some brilliant kids. We got some beautiful kids. I have kids in that same age range in my family, on both sides of my family, right? And some of them have shown up for one class. Some of them never shown up, right? But I'm not going to sit there and complain, because at the end of the day, I know the value that we're delivering. I've seen the impact already. There are kids in our class now that have been there literally in every camp, every day. And you can see their level of intellect versus, you know, some other kids, right? So the thing about it is, you know, people will catch on when they catch on, man. We just got to keep doing the work. And when folks are ready, you know, everybody gonna be ready at different times, man. But I'm pretty sure I'm not the only one. I'm pretty sure Corey got, you know, people in this family who never came, never supported. I'm pretty sure you do too.
And
right?
so, but let me be clear. I'm not complaining, right? I'm not complaining. I'm looking at it from a macro view,
I get it,
because I understand everybody's got stuff. And I had a mentor told me that everybody's evolution comes at their own time.
Yes,
so I get that.
Yes.
I agree with that, right? But again, when I'm looking at it from a macro view, it's like, this is something that could benefit everybody in our community. We ain't selling no products. Like, no. I want y'all to be clear. In this whole financial literacy space, it's a lot of grifting going on. And people don't realize that they're doing this to sell their product or service. Yeah. And there's nothing wrong with making money. Don't get me wrong. But when you do it under the guise of, I'm here to try to do good for the community, but you really want to sell something, that's where the issue is. So
no, I get that. Yeah. And we don't sell anything. This whole thing is really altruistic. We don't sell anything.
Hold on, stop the presses. The man of the hours here.
Oh, legend.
What up, baby? What up?
Don, appreciate you, bro. Like, you really set it off for us yesterday. And you know, and it was appreciated. Like, you know, the kids were excited. Like, we had, you know, yesterday was fire, man.
Yes, it was.
But to your point, though, you're right. We don't sell anything, but at the end of the day, man, the day's going to end. All you could do is put the work out there, and eventually, you know, folks catch you up to it. But I feel like sometimes, like, and I've been where you are, but I think sometimes that's like wasted energy. You got to let those, like, you know, those that one day it'll all make sense to everybody. But because sometimes you're living in history, so you don't even recognize the impact of what you're having. But I'm starting to see it now, right? Because I've seen students that have been there. I'm running the kids in Target. I've told the story. So I run the kids in Target who run up on me and show me their portfolios, right? I don't know where these kids will be at in 10, 15 years. I had like one of the fathers who was in our camp. He's there every week. He came to me yesterday, and he's like, "Yo," like his son is kind of quiet in the class sometimes. He was like, "Yo, he's picking up all this." He said, "I'm going to hit you up this week. We're starting his brokerage account this week. All he talks about now is wanting to invest in Roblox, right?" And I never even brought up Roblox. He plays Roblox, so now he wants to.
Well, the kids have brought up Roblox several times.
Yeah. So now he wants to invest in Roblox. He said that's all he talks about, and I'm like, this is what I mean. His kid is like 6 years old, and now he wants to be an investor at 6 years old.
Yep.
Right. So
what kind of runway is he going to have by the time he's 26 years old or 36 years old?
This is what I'm saying, right?
Yep.
And so this is a conversation from yesterday, right? So what I'm saying is that the impact is there. Should we be booked? There should be more folks? Yeah, I mean, it should be standing room only. But the fact of the matter is, everybody ain't gonna do that, man. I've had people tell me like, "Nah, my kid ain't into that." What do you mean not into that?
I get it. But again, I gave you the context. So I'm getting it from a macro view, right? Yes. I understand everybody can't do it. I understand everybody's got situations, but goddamn it, everybody's at Pop Warner.
This is it's all about what you value, right? So it's a value conversation. Joe, shout out to Joe who was there yesterday. He showed up too. He said something to me yesterday. He said this should be going on Saturday morning in every city across. Like this class that we're having should be going across every major city. Should be having the same thing going on simultaneously.
Yeah.
Like,
yeah. But I also understand that as we get more, we have to be super intentional about making sure the value doesn't deplete. Because as you get more and more people, things kind of fall off. So it is a blessing. I recognize that it's a blessing, that it's intimate. We got the parents there. We got a lot of other support from the community. So I get all that.
So, but also let's not like this. Just this summer, we've served over 100 families. Just this summer, between the first 3 weeks, like we have, like so, I'll get what you're saying. It should be thousands, right?
Right. More than Jarrell. Sorry,
Jarrell. What's up, good brother? So I get your point, right?
Yeah, but, that's why I said, I get it. It's all context. I got it.
Yeah, man. But I respect you. I respect how you feeling, beloved. But I'm excited because things that is like, to me, this has been like our best camp, right? Figuring out the hybrid approach has been awesome because we figured out a way to make it work. I still think we could tighten it up a little bit better, but I think that we've pulled it off thus far. In the first 3 weeks, we got 2 left. We've went over everything from, what is money to budgeting. Yesterday, we talked all about the stock market, which they loved. Like one of the kids came to me and was like, I was waiting on, this is the one I was with, the young boy in the blue shirt. He's like, I was waiting for this all summer. Right. So that's
when you see Camille's daughter, right?
Yeah.
She's pretty shy naturally. I've seen her in her element. She's outgoing now. And
she's coming out of her shell. Yeah.
Yeah. It's like beautiful.
Yeah. Yeah. And the thing is, so next week we're going to talk about real estate and a little bit of Bitcoin. So it's like they're hearing about all these things, and even the real babies that some people bring their kids there that some of them I believe ain't even 5 yet, but they want them just to hear it. You know what I mean?
We got newborns in the class, dog.
Yeah, we got literally newborns. But now and I talk to their parents, they're just like, look, I just want them to hear this vocabulary. Like they don't got to understand anything. If they start to hear it now, and I'm like, see, that's dope.
So Don, I have a question for you because I think you might be our oldest tenured person here. What else would you like for us to do? Just something for you to think about.
Corey, you muted, by the way. And you talking about in terms of like talk about, or you talking about something like
all the above? Whatever comes to mind. Don.
Whatever comes. What would you like to see us do? Like that we haven't done, that we should be doing, or could be doing. Yeah. What can we do better?
I'm gonna tell you one of the things we about to start doing. Like, and Kamari brought it up yesterday. So we're gonna do some meetups with the folks in our village. Like literally, just
just pull up on y'all like y'all pull up on us.
Yeah, no classes, nothing for sale, nothing. Just literally shit. Because the shared energy about the class. That's the other thing too about our camp is the shared energy. I've seen kids network with each other and become friends. So it's nothing that beats that shared energy, right? And I've seen it even on our Zooms. They the kids in our Zooms be like clicking up. So it's it's dope. That being said, though, today is Sunday, right? Today we're going to have a quick class. We're going to get out of here. Before we start the class, I just want to say to everyone who's not a member of our village, please join our village by going to blackwealthrebels.com. Go to blackwealthrebels.com. It is completely free to join the village. We do have paid tiers. Paid tiers get access to other information, of course. But with that being said, we just want everybody to join just in general because like some of these social platforms are playing games with us, so be it. With that being said, though,
thank you, Don.
Don, yeah, think about it. Yeah, you don't have to answer that right now. Just think about it, but we try and put some work in community-based, and even online. We just trying to do more. Like our thing is to do more. It's funny hearing Rachel speak yesterday, and Rachel bodied it. And Rachel says something that I struggle with too. No, she says something I struggle with too, but it was great to hear someone else say it, right?
What's that?
When someone asked her, like, what are your goals now? Where you are in life, what are your goals now? And she said, from a financial standpoint, I've kind of like done more than I ever thought I would do. So and I don't need a lot to survive. Like I'm not, a high maintenance person. So she was like, I'm struggling with where I even want to do financially. She was like, but what she's focused on is impact now. And I felt that on a spiritual level, right? Because I've achieved more financially than I ever thought possible.
So I got an idea for y'all, for both of you.
Mm-hmm.
Y'all can always submit to the Mar and Corey Baby Fund.
Oh God!
No child
God!
No child left behind.
Oh God!
No, but I think it's a real thought though, right? Because I tell you, this is not Jimmy's therapy session this morning, but one of the things that I struggle with personally though, it is like survivor's guilt in my own way. But I think impact helps me. So when you ask that question to Don, that's what it like made me think about. How can we have a bigger impact? I think about that every day. Anyway, like I said, it's not my therapy session, man. This is Sunday class, man. So if you guys are ready, I'm ready. Good morning, Miss Maui. How are you? Lorraine is in the building. So want to make sure we acknowledge our sister. But we got a lot of folks watching live, man. Let us know who's here, man. I see Don, I see Jason, I see Jarrell, Miss Maui. You know what I mean? But let's get to it though. Oh, come on. I got this nonsense up there. Let me remove that from there, man. All right, man.
That's getting traction, baby. Stop eating the heart. The heart fire.
All right, so you guys can see my PowerPoint, correct? All right, good. Let's get to it. So this morning, we're going to talk about the metric known as return on equity. This is an investment metric that Warren Buffett swears by. So if you give a company $1, how much profit would it make for you? This fundamental question is at the heart of this analysis that we're going to talk about, which is ROE, right? So we're going to talk about ROE and why it's a critical metric for evaluating companies and why Warren Buffett considers it essential to his investment strategy. I'm going to tell you guys where I thought about this. I watch a lot of Berkshire. I told you this, I think last Sunday. I watched a lot of Berkshire old meetings, and I was watching a couple meetings, and he kept talking about why he loves ROE, why he loves ROE, why he loves ROE. And I was like, okay, you said it a number of times. You've written about it in your shareholder letter. So maybe I should bring this, to one of our Sunday classes and just have a conversation about it. So he, in Warren Buffett's words, he said, this is one of the most important tools available that you can use to evaluate a business, right? So it's one of the most important tools available. Also, ROE can sometimes you'll see it referred to as return on net worth, right? That's another way I've seen it referred to is like return on net worth. So let's get into it though. And here we go. So here are the basics of return on equity. Here's the formula. So the ROE formula is you take the net income and you divide it by shareholder equity. So return on equity measures how efficiently a company uses shareholder capital to generate profits. It tells us how many dollars of a profit a company generates with each dollar of shareholder investment. So to simplify this, let's say a company is, has $1 million, right? A company has $1 million, but they have 500,000 in debt. We're going to simplify it, right? So now 500,000 is shareholder equity. So what you do is, whatever that net income is, you divide it by that 500,000, and that will give you, a ratio or a percentage of ROE. Now you can use ROE to compare companies to each other. You can also just get an idea of how good management is doing at using that shareholder equity to generate bread. So here's why it matters. It reveals capital efficiency, how management doing it, indicates management effectiveness. Like, is it a problem with management? Is management doing a good job? What decisions are they making that affect ROE? It also helps to identify sustainable competitive advantages for a company. And it allows for a meaningful industry comparison. So you want to compare similar companies. Now, I say this every Sunday, and I tell you every Sunday when I say it that I'm going to continuously say it. When you buy stock, you are buying equity in a company. You are buying equity in a company. You are buying ownership in a company. You're not just buying some random number on the screen. One of the reasons why a lot of people believe in ROE is because it ignores the price of the stock. Right? It's talking about the metrics of the company, not the price of the stock. The price of the stock has nothing to do with this equation, as you can see. This is studying the business, not the stock, right? Net income divided by shareholder equity is really ignoring the stock price, but it's talking about the company. So we're evaluating the company. I'm laughing at Michelle, yeah. So, I'm sorry, y'all. Michelle's comment had me laughing. But with that being said, though, we're evaluating the company and not the stock price. A lot of times, a lot of times we pay too much attention to the stock price. Let me get a little sip out of my beautiful cup. You know what I'm saying? And Kamar, you want to tell them about the cup while I get my sip?
Oh, you want me to tell them how my white cup is better than your black cup, but they're both dope. So when you get a chance, listen. Get some sports y'all supplement a black-owned company. That damn, you just all kinds of rude.
I said, excuse me, y'all. I apologize. I'm working on a couple hours sleep, man. I went to see Superman in the middle of the night last night. So, excuse me, but I digress. Get Supplement, though. That is our sponsor. So that wasn't just an ad. That was real. Needed to give me a sip, but I'm good now. So anyway, we're talking about evaluating a company and not a stock price. So you want to look at net income divided by shareholder equity, and that's how you come up with, the ratio, which, the ratio, by the way, is the percentage, right? So let's break down that formula. So let's talk about net income, which is the first part of that formula. Net income is the company's bottom line. So you look at the total revenue minus all expenses, taxes, and costs, and this represents the profit available to shareholders. So you look at how a company is making money, and you want to take away their expenses, their taxes, and costs, and you get to their net income. And you divide that by the shareholder equity, which is assets minus liabilities. Very simple, assets minus liabilities. So it's what shareholders truly own in the company. So this includes initial investments plus retained earnings over time. So it's the equity that you absolutely have. It's the equity that you absolutely have. It's not just like what the company's total value is, because you have to subtract from that the liabilities, right? Whatever debt is there. So let's examine this simple calculation. If company X has annual net income of $50 million and shareholder equity of $250 million, the return on equity will be 20%. So what this actually is telling you is this. This means that for every dollar invested, shareholders receive 20 cents in annual profit. So for every dollar invested, 20 cents is coming to the shareholders in terms of profit. So this is what you're measuring. You're seeing how the dollars that are invested are bringing you back, some chicken in terms of profit, right? That's a simplified way. 50 million, 250 million, ROE is 20%. So for every dollar, 20 cents is coming back to you as an investor. So let's keep it moving. That's a simplified way to look at it. So what makes it a powerful metric? Capital efficiency. We talked about it. High ROE indicates that management is excelling at turning investor money into profits, maximizing value creation with minimal capital requirements. We're talking about large corporations. And sometimes large corporations, right, they exist and they make themselves rich, but they're not doing a good job of managing your capital, right? We don't care how much salaries they have or what they're doing in terms of like how they're making themselves rich. How are they returning your capital as an investor? We want to know that they're doing a good job, and we talk about management, right? Because we've seen people come in and buy big equity stakes in companies, and the first thing that they look at is how management is not doing great in the ROE. So what do? They replace management. A lot of shareholder activists do that. Angie Ange says, good morning. Are these saved so we can go back and watch? Absolutely. By the way, Angie Ange, you can join our village. Go to blackwealthrebels.com. Everything is housed there. All of our Sunday classes are housed there. You can join for free. We have paid tiers with other stuff. I don't have anything. I'm not trying to sell you anything.
Sell her something. Sell her something.
I'm not trying to sell you anything, but I got.
You can sell her something. That's my homegirl.
Okay, I got nothing for sale, AJ. I'm just letting you know. Go to blackwealthrebels.com. All right. Also, comparability. ROE can be used for comparability, right? This provides a standardized metric to evaluate businesses across the same industry, regardless of size difference. So whether we're talking about, a $1 billion company, right? $100 million company, or whether we're talking about multi-billion-dollar company versus a $1 billion company, ROE, right? We can still, compare the ROE. How are they returning? What are they doing with shareholder equity? So you can compare companies within a specific industry, right? So it's a great way to use that. Also, we talked about Buffett. One of the things he talks about often is this is also an economic moat indicator, right? We talk about having a competitive advantage within the marketplace. So consistently high ROE signals a durable competitive advantage that allows a company to maintain profitability despite market challenges. It's not about companies just having spikes in growth to then fall off, maybe have another spike in growth, maybe not. We're talking about consistency here. So if you look at the ROE over time and it's consistent, you see that there may be an economic moat, or that management is just doing a wonderful job of using the capital to then return value to shareholders. So let me get into a couple more things. I got some notes over here. I have a question here. Are you still doing stack sats or dot? Are you still doing stack sats or dot trying? Just curious. So great question. Yes, it is on its way back. The reason, it was a lot going on personally. So I took a quick break from doing it, but it will be on its way back. Both of the pods will be dropping soon. So be on the lookout for that. Thank you for the question. But yes, it will be back. Possibly this week. More than likely this week. All right. So what's considered a good ROE? 15% or plus, like that last example was 20%. So that would be considered strong performance, right? So if you're above 15%, that's excellent capital efficiency, typically found in companies with competitive advantages, companies that have moats. If you want to have a decent performance, anywhere between 10 to 15% would be considered decent. So that's solid returns that generally exceed the cost of capital in most industries. Now, if you're less than 10%, you want to look into that. It's not saying that you have to run away right away. If it's less than 10%, you just run away. You want to just figure out why it's less than 10%, what's going on, will it change? And also, with all of these metrics that we talk about, you don't want to look at them in a vacuum in one individual year. You want to look at these over time. So that just gives you a little framework. And by the way, anything we say here is not investment advice. It's for educational and informational purposes only. We're just talking about what we do. You just give me some information. So plus 15%, or stronger, that's strong performance. 10 to 15% is decent. Less than 10%, possibly a concern. So ROE should be evaluated, though, alongside other metrics, such as return on assets. So that's how you measure efficiency without debt consideration, return on invested capital, right? That includes both equity and debt. So, we could talk about those in future episodes, but this will just give you a quick framework to use when you're looking at ROE, 15 plus, 10 to 15, or less than 10, right? Just give you a quick framework. So why Warren Buffett uses this, right? So,
but Jimmy, can we do something real quick?
Yes, we can, sir.
A visualization. What are some companies with high ROE? Do you have any off the top of your head?
I haven't looked in years. I know Coca-Cola used to have a very strong ROE. Let me see.
I just pulled up some. So Apple has a 148% ROE. Microsoft's got a 32 to 38% ROE. Visa has a 30 to 40% ROE. Procter and Gamble. Matter of fact, one of the kids, shout out to the kid the other day, who wanted to invest in Procter and Gamble, has a 25 to 30% ROE. LVMH has a 20% ROE. Those are crazy numbers.
No, the Apple joint is ridiculous, yo.
Yeah. I mean, yeah.
Yeah, Apple is ridiculous, right? But again, right? So now let's bring it all together with you asking that question, right? You look at Warren Buffett, who kind of like, was watching his talk as we maybe think about having this conversation. He prioritizes ROE. What is Berkshire Hathaway's number one holding?
I thought they sold it.
No, they didn't sell all of it. They sold down. It's still number one.
Okay. But Apple was their number one.
Number one.
Yeah.
Right. which has, yeah, if we saying that 15 or more is a great ROE, and they have 148, that is like
That number is
insanity.
absolutely bazooka. It's crazy.
That's
That's
insanity,
crazy.
right? It's a well-run company, right? Although lately, based on narrative, they've been, their stock has been a little bit flat, right? Which
It's
allowed me
not
to load up,
sexy. It's not sexy enough.
which allowed me to load up on Leaps, but I digress. Anyway, with that being said, though,
Wait a minute, you
Buffett
bought
said,
Leaps on Berkshire?
no. I actually did a swing trade on Berkshire. I shared that in the village, though. I did a swing trade on Berkshire a couple months ago. When it fell below 450, I did a swing trade and I cracked them for a nice, nice piece of change.
Okay.
Now it's at about 470 and some change. But no, I'm talking about Apple.
Gotcha.
Yeah. Tim Apple's company. Anyway, the best business to own is one that over an extended period can employ large amounts of incremental capital at very high rates of return. It's a Warren Buffett quote. So he examines ROE over a 5 to 10 year period. That's his strategy that he talks about. He avoids companies with erratic results that might indicate fundamental weakness. He also thinks of it as an economic moat indicator. Sustainably high ROE signals that a company has a competitive advantage, allowing it to maintain profitability, right? We talked about that. High ROE businesses can reinvest profits at high rates, and that's very important as well. One of the kids talked about this yesterday, right? How you always have to reinvest in your business, right? You always have to reinvest into your business. So having a high ROE can do that for you, to reinvest in your business, to then turn that capital over and over and over again. So Angie says, will you guys discuss the near future about the recent crypto news with the House passing something and or discuss XRP at all? Not trying to interrupt. So Angie, within our village, we have a show called Stack Sats or Die Trying, but we will talk about the recent House passing something. And in terms of XRP,
Didn't we say we're going to talk about that on Wednesday? Because
we can talk about it this coming Wednesday, like this Wednesday show. But in terms of XRP, leave it alone. It's super trash. Go buy Bitcoin. And that's my only comment. All right. So with that being said, ROE red flags when high returns aren't what they seem. So ROE is a beautiful metric, but I'm not going to act like, it doesn't have its flaws. It does have its flaws, right? So excessive leverage can be one flaw. When you look at the metric, of net income, right, divided by shareholder equity, what a company can do to kind of, create a high ROE is borrow a lot, right? If they borrow a lot, and as long as the income kind of stays flat, the ROE will jump up. That's just a math equation. So what you have to watch for are companies taking on excessive debt just to increase their ROE, because Kamari can tell you from an accountant standpoint, companies play games all the time, right?
All the time.
So if I feel like people are just looking at ROE, which is why you can't use one metric in a vacuum, you really have to watch for the debt they pull. If I have relatively stable income, I could just get more leverage and then push that ROE number up. So,
and that's part of the reason why Apple's ROE is through the roof, because they've been deploying debt.
Yeah, but they also have so much cash on hand as
Correct.
well.
That's
right?
Yep.
Add context to it. They have a lot of cash on hand. So again, I told you I was a nerd reading through. I was reading through some shareholder letters and watching videos. But in 1977, letter to shareholders, right? And I was doing some research in the 1977 letter to shareholders, because he's been doing it that long. He was writing a letter to shareholders. I wasn't even born when this letter came out, by the way, but I went and read it anyway, because, as I always say, you got to do the knowledge. One of the statements that Buffett's making in the 1977 letter, he says, beware of companies that have a high ROE, but also have high debt to equity ratios. So he says that you have to watch their debt to equity ratios with the ROE, because you just don't want a company using excessive leverage to push up that number, right? Also, one-time events, right? So asset sales, accounting changes, or unusual gains can temporarily boost ROE without improving the underlying business. So watch out for one-time events that can have an effect on that number. Now, this is why when you go back to his letter to shareholders, he always talks about 5 to 10 year period. You never use any of these metrics in a vacuum for one individual year. Use a 5 to 10 year period. And over that 5 to 10 year period, it will give you an idea of what it looks like, over time. Also, which is very popular now, are share buybacks. We see a lot of share buybacks, not necessarily completely a negative thing. Sometimes it's a positive thing. If I'm looking to allocate capital in the market and I don't see anywhere that I can do better than, buying back the shares of my company, then I'll do a share buyback. So aggressive repurchases reduce the equity base. So mathematically, this increases the ROE without actual operational improvement. And you have to be wary of this too, because sometimes, right, you boost your shareholder price and you boost your ROE, but you haven't changed anything fundamentally about the business. And one thing that scares me when I see this a lot is sometimes compensation for C-suite or executives in the company can be based on certain metrics. And, they'll play games as well with buybacks and things of that nature to increase their compensation. So again, this is why, right, this is going to sound counterintuitive to most of today's lesson. This is why I believe 95% of people shouldn't buy individual stock, right? Because unless you have the time to follow these companies, look into their books, you're better off just buying an ETF. Now, I think that 100% of people should be investors. I think 100% of people should be invested in the actual markets. But I think most people will be fine with just a couple ETFs or mutual funds. That's just my opinion. I don't know how Corey or Kamari feel about that. That's my opinion. But when it comes to individual companies,
I think we all agree on that.
Okay, I don't know, Corey, what you think, bro?
Meh. But yeah, I mean, most people don't have the time to do it, so I agree with that.
All right, so there we go. So the reason I say that is because there's a lot that goes on with a corporation. So if you're willing to put that time in and become an investor and really follow what's going on in the market, so be it. Then you can have the success that you desire, and you could build a lot of wealth. But if you're someone that's, you got a lot of things going on, you got family, you got work, you got, social activities, you got all these things going on, you still should be an investor, but you should be a passive investor. And maybe that's a class we should really talk about doing maybe next Sunday, passive versus active, because you still can be an investor and not be actively in the markets every day. I spend a lot of time like reading and studying. And, even with all the time that I put in, I still believe that probably more than half of my investments are still passive investments. That's because I'm also lazy. Being a lazy investor is the goal. The goal is to not do no work and just get paid, right? If you want to replace one job with another, like, are you really, getting your desired result, or you just want to sit back and do nothing, right? That's just me. Some people enjoy the sport of it all, and that's cool too. But don't act like you do when you really don't have time to, is all I'm saying. You're better off just buying some ETFs, some broad market ETFs. By the way, there's an excellent book that, goes into this. It's by J.L. Collins. It's called The Simple Path to Wealth. I don't even 100% agree with his philosophy, but I think it's one of the most powerful books in personal finance. So y'all can look that up. It's called J.L. Collins, The Simple Path to Wealth. But I think the simple path to wealth, and now I'm going to increase what I'm saying, Corey. I think 95% of people shouldn't be in individual stocks. Maybe like 96% should just follow the simple path to wealth, right? But for those that are willing to do the work, you can have higher rewards if you're willing to do the work. But be honest with yourself in terms of whether you're willing to do the work. I can't answer that question for you. Only you can answer that question, because that is an individual decision, and everyone's life is set up different. Everybody has a different lifestyle design. Some people don't have any kids. Some people got 7 kids, right? Some people don't have anything. Some people don't work for themselves. Some people have a full-time job. Some people work 40 hours. Some people work 60 hours. Some people work in high stressful situations. So when they get off work, they don't want to deal with anything else. So everybody's situation is completely different. So you have to do that analysis. Getting back to the ROE though, if you're willing to do that analysis, ROE is a metric that is very powerful. So this is an example, right, of consistent ROE versus a company that just has a spike. What we're looking for is, I was getting ready to say orange, but they're different like shades of that. But the one that's, going straight across, that's what we're looking for. We're looking for consistency. We're not looking for huge spikes, right? The one has a huge spike, then a huge spike down, then a spike sub spike. That's not what we're looking for. We're looking for consistent ROE. You don't want ROE based on any sort of like accounting tricks or any sort of like individual thing that happened to make it spike up or spike down. What we're looking for is consistency. So when you compare two companies and you look at them over 5 to 10 year period, you could plot them out. And by the way, you could do all this in Excel. You could plot them out, and you can look at those lines and you can see, okay, this is very consistent. This is not. And again, if you're not willing to do this, you probably should just go grab you an ETF. I'm just going to keep it a buck with y'all. I have Google Sheets for any individual company I own. And by the way, I don't own that many individual companies, but this is the kind of analysis that I do. I plot them out. I look at the ways that they make money. I put it in a pie chart in terms of how they make money. How are they making their revenue? Because I take it serious. I sit on shareholder calls, right? I read quarterly reports. It's a lot of work that goes into it. But even if you own one share, you own equity in a company. And if I own equity in a company, I want to know how my company is making money. Because again, one of the things about saving and building wealth is you got to be real serious about protecting your capital, right? You got to be real serious about protecting your capital. So if I'm not willy-nilly just I'm not gambling here, right? So some people like look at investing as if they're gambling. I'm not gambling here, right? I'm using information and data to make educated decisions on how to get a higher return on my money. So I'm going to take it serious. I'm going to use charts. I'm going to look at all the data that's actually available to me and make those decisions, because I'm not playing games with my money, because money is time and energy. If I spend time working, whether I'm working for myself or I'm working for my employer, whether I'm literally giving my life to get those resources. So, I'm not trying to get too crazy or too deep into this, but when you play with money like that, you're throwing your life away. You spend your time and energy to create this value. So act like it's your time and energy by protecting it and growing it, right? The more money you have, the more energy you have. When you leave, the next generation, you leave them assets. What you're leaving them are time and energy that they don't have to go spend to get those assets. So I take it that serious. And let me get off my soapbox real fast. But that is ROE. So think about it this way, right? Net income divided by shareholder equity. This will give you your ROE. We want a high ROE, but we want a high ROE that's based on good data. It's not based on manipulation. And that's what I want to leave you with. Have a high ROE, but it's based on actual data and not manipulation. It's not based on this leveraging up, right? I see this a lot of time in real estate, because this works in real estate too, by the way, where people will tell you that they have all these, all these properties and all these things, and they're so levered up that, you're just inflating numbers. I don't care that you own 2,000 doors when you have no equity, because all you have is a bunch of leverage. Right? Your cash flow is $300 a month. Like, dude, what are we doing here? I've met people in real life who have 100 properties, and by the time they look at all the debt, all the repairs and everything that they do, they making like $600 a month. What are you doing? What, $600 a month? Like, what are you doing here? You can go get, you can go drive Lyft for a couple rides, and I'm saying, like, what are we doing here? Right? Without all of the risks that are involved in having all those doors. So I say all that to say, know your numbers and know when people are manipulating the numbers, right? And you get this information. Corey taught the kids yesterday about the SEC and how the SEC requires certain documentation to be filed, quarterly, annually, and how this information is available to us as investors. So go to finance.yahoo.com. A lot of you guys that are in the village have seen how we use TradingView to get a lot of analysis and use a lot of data. Get the data, do the research if you're willing to be an investor that's going to take it serious. If not, go get a passive investment in an ETF, call it a day, and go live your life. Anyway, with that being said, that is return on equity. I'm going to go to the chat, see if we have any comments, thoughts, concerns, ideas, questions, or what have you. Let me remove this from the screen for a second. Blah, 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 blah. Shelby's in the building. What's up, Shelby? Hey, Shelby, you see your man yesterday? Yes, Shalmar. He was like, forcing me to listen to groups, all the groups with such and such +1 or +4 or +5. Anyway, Angie just laughing. She must have heard my XRP slander. Marvin, what's good? How are you, Marvin? Appreciate you.
Yo, what's really good?
Joyful, Lord, we adore thee. What's up, Joyful? How are you?
Hey, what's going on, sis? How you doing?
Miss Edie's here with us. Miss Edie, how are you? Good morning to you. Good morning to you. So with that being said, does anybody have any thoughts, ideas, concerns, questions about return on equity, or anything that I said about maybe you shouldn't be invested in individual stocks?
I'll give you a little sweet trick for ROE too.
Okay.
Go to Finviz, and then you can do the DTE, that the equity and the ROE, right in Finviz, and you can get a little quick layout of the companies.
Yeah. All right, let's do that live real quick. All right, let me do that live. Let's look at that. Let me pull up Finviz. All right, let's do it live so so the people can know what we're talking about, because Corey knows how to do a lot of metrics on Finviz. So I'm gonna have you walk me through it. I'm gonna share my screen, and we're gonna pull up Finviz, and we're gonna, you understand?
You're gonna get spam, bro. Because that's the one thing I hate about this site, the spam.
So I'm on a different computer. I'm not logged into my FinViz, so I'm definitely gonna get spammed because I'm not logged in. But because I'm on a different computer.
Yeah.
I've been using wifey's computer because she got a better computer than me. So
Yeah.
anyway.
So go to the go to the joint where you look at the metrics. I can't see your screen right now.
All right, so is it under the screeners?
Yeah, screener.
All right, so we're going on screeners, right? So for those watching, I clicked on screeners, and as y'all see another pop up, but it is what it is.
So
right,
now we could go to the metrics, right? So do you want big, small, or do you do not care? If you care about the size of the company, then you can look at the size of the companies that are there. Like you can go over all the way to the left and then pick the size of the company that you want.
All right, so I'm gonna walk y'all through this. I went to finviz.com, right? I clicked on screeners. After clicking on screeners, right? I clicked on it says descriptive, fundamental, technical, news, ETF, all. I clicked on fundamental because what we're talking about is part of fundamental analysis. For those that don't know the difference between fundamental and technical analysis, go to the village. We have a whole class on fundamental versus technical. But I clicked on fundamental. After I clicked on fundamental, there's an actual drop down that says return on equity, right? Yep. And you can pick anything with return on equity of over 15%, over 20%, over 25%. So I'm going to click over 15. I'm going to use the Buffett strategy, over 15, right? So now it's going to show me companies that have an ROE of over 15, and it's in alphabetical order. So,
all right, and you could go up, go back up, and now you could go price to the free cash flow over on the left.
Okay, price free cash flow. So let's see. You could pick less than 15, higher than 50. All right, let's do
higher than 50.
Let's do higher than 50. That really narrows down that numbers. Now we're doing price to free cash flow higher than 50 with return on equity of over 15%. Amazon.
And if you go back over, and it has debt to equity right underneath return on equity.
Okay.
Right.
So let's do that. Let's do under 1.
Yep, under 1.
Now it made it even smaller. All right. So there you go. It made the list even smaller. So now let's look at some of the companies that fit the bill, right? That this is again, we talk about over 15, so it has a good number of return on equity, under 1 in terms of debt to equity, with a higher than 50 price to free cash flow. So it went from multiple screens of companies to, now we got just 3 screens left. Some of the companies that fall under here, right, which means that management is doing a good job of managing the capital. We have Amazon, Broadcom, name some of the companies we know, Costco. It's crazy, man. Costco is such a well-run company. And the reason I say that, and again, not investment advice, but every time we go over one of these fundamental metrics, right, they
always do.
They consistently pop up. So Costco, and by the way, Costco is also considered one of the best places to work. Their employees love it. Their employees make good money. So this is a very well-run company. But they pop up on this screener as well in terms of ROE and not overusing leverage. Who else do we know here?
Broadcom,
right? Let's see what else. What's on the second page here? Let's see what's on the second page here.
Check your spam screener down.
I did. Microsoft pops up, right? Netflix pops up. All right. What else?
General Electric. GE was on that page.
We only got 3 screens. Only 1 more left. Shopify pops up.
Nvidia.
Right. Texas Instruments. Wally's World. Walmart pops up.
Yeah. So these are all your good. These are great companies. This is what I'm saying. Like this will show you, companies that's not using debt to ramp up their return on equity. So you could just create a list right there of companies to buy.
Yeah, and then you can do what I would say is you can start here and then go within each individual company and look further.
Yep, and dig in deeper.
All right, so there we go, man. So we did it live right here. Remember, finviz.com. Click on screeners. Click on fundamental, and we gave you guys the 3 different drop downs to use, and that'll give you a list of companies. Corey actually did a thing on screeners, which is in the village as well. It's in the village as well. So, take a look at that, how to use screeners. Corey talked about how to use screeners as a trader. So anyway, with that being said, appreciate that, Corey. That was a good tidbit to share. I'm glad we shared it.
Real quick, you can, because it's really hard when you're looking at companies, thousands and thousands of companies, when you can narrow it down to about 50. And then you can.
How much was that total? That took it to how many total? Let me see. That was.
You said 58, right?
58. Yeah, 58. Yeah, we went from 1,000 companies to 58 companies. You know what I'm saying? Dawn, what's up, Dawn? How you been? Much love to Dawn. That's our sister. And by the way, for those who don't know, Dawn sells islands. If you look at the buy an island, hit up Dawn. You know what I'm saying? I just want to flex, flex for my sister. Yeah, Corey's video was really good. So I'm glad you enjoyed that. You know what I mean? Because Corey did a whole training on how to use screeners, but we add that to it.
And
The honey hustler's in the building.
What's really good?
Nicole was on our Zoom yesterday trying to steal the kids' money. So shout out to Nicole.
She was giving them the sauce, and then she was trying to take it back the next week.
One love.
One love, Nicole. We love you.
We'll definitely appreciate you. So any questions or thoughts or concerns about what I said about return on equity or my rant about why most of y'all shouldn't be buying individual stock? Because I know people probably gonna inbox me about that because people hate when I say that, but I actually
you say it every week though. So you get inboxes every week.
I get well, no comment. Now you're trying to get me in trouble. But anyway, but I do say it every week, and people do come at my neck about that. They like, yo, you supposed to be teaching me how to buy stock, and you telling me not to buy stock. I'm like, well, first of all, I don't give investment advice. It's number one. Number two, I gotta be honest, right? I'm not going to tell you things for the sake of trying to sell you anything because I don't care about that. I care about, what the data says.
And we care about your actual growth as an investor. Like that's what most people don't understand. Most people they care about their own growth.
They want it quick, hot, and sexy.
Like, listen, we care about our own growth too, but we care about the people that listen to us, that hear the things that we say. Right? We have actual integrity, so we want to make sure that your accounts are actually grown and not.
That's a whole other conversation because I realized recently that I hate to say this. I was having a conversation with Miss Kinky Curls, who is sometimes in our chat about integrity and how people are. She told me, she was like, I think that most people got a little bit of tyrant in them, and I was like, I don't know about that. I was like, but what I realize is there's not a lot of integrity out here. So when you actually meet someone that has integrity, sometimes people don't even know how to deal with people that have integrity because they're so used to the world just being so cutthroat and not having integrity that's their norm. That's almost their baseline. So when you meet someone that doesn't put money first, people don't even know how to treat you. People really don't even know how to treat you.
So you're saying everybody's been brainwashed? Is that what you're saying?
So I don't even know if it's a brainwashing thing. I think it's listen, man, America, man, like, capitalism, and I know you hate I'm gonna blame it on capitalism, right? But capitalism like this does this thing to us where we expect
capitalism, but go ahead.
It is capitalism, man. It is capitalism.
I'm gonna tell you why it's not capitalism.
I know you want
happens when there's socialism, communism, like everybody does it. As Corey says, people. That's
people
all.
are going to. I get that, but capitalism has something else to it, though. Capitalism has this doggy dog thing to it. Because I know you love of capitalism, right?
But I'm not. I'm in love with the facts. That's all.
I don't know if you are though.
I am.
Right? I don't know if you are though, because here's my other point, right? And we could talk about this in a whole other conversation. The thing that you describe isn't actual capitalism. Actual capitalism is a poison. What you describe is something separate than capitalism. So you want this.
Well, capitalism is a theory. First of all, right? So that's the thing. Nobody really talks about it. We don't have capitalism here in America.
Okay, so now we're talking then. All right, now we're really talking, right?
So
but what we consider to be capitalism is a poison.
All this time debating this one damn word, but nobody's made any progress. At the end of the day, for Black folks, it's about gathering and utilizing resources for our community. Forget the terms. We spend too much time on that. Sorry.
It's not about spending time. It's not about spending time on the terms. What I'm saying is what you describe when you describe your vision of capitalism isn't capitalism. That's what I'm saying, right?
And what I'm saying is that everybody that uses the term capitalism they're not talking about capitalism. That's what I'm saying. So let's leave it out. Let's not even talk about it.
No. But I think it's worth talking about, because the point that I'm making about people that move into Turkey is that was my overall point, though, is that people, and I do think it's capitalism. All you guys can argue me all you want about what capitalism is, but capitalism, because first of all, in order for capitalism to succeed, you're going to have someone who's someone's going to have to be oppressed in the system of capitalism.
Yep.
Why is there oppression in socialism and communism, man?
I'm not, but why are you bringing those? I'm not talking about this. Because I didn't say those were the answers either. Why are you bringing up? Why?
You're making it singular to capitalism.
So that's what I'm talking about.
That's
what I'm talking about.
That's intellectually dishonest.
What you're doing is intellectually dishonest, right?
All right, bros. Let's not go on. Let's not get moved off to the side.
I'm not trying to go to the side, but when people do this, right? This is what people do. What Joe Biden did. It's like, if I'm talking about this one guy, what does the other guy have to do with it? I'm not talking about any of them. I'm saying the problems with this. I'm not bringing up the other thing. I didn't say that they were the solutions. So how, anyway, with that being said,
Ann agrees with me. Back to ROA.
Yeah, but Ann is making the same argument. You bringing up socialism. I didn't bring up socialism and communism either.
Well, maybe you need to learn. It's a learning opportunity for you, Joe.
Oh, goodness gracious, bro. All right. Come on.
Man, listen.
Y'all about to get sidetracked.
Listen, man.
I'm done.
I'm not getting sidetracked. He want to take shots. I was trying to have a legit conversation, right? Because when you talk about the problems with capitalism and integrity, that has nothing to do with socialism and communism. I didn't bring those up either, right? F all the systems, right? Maybe we need a whole new system that's not socialism, communism, or capitalism, right? But the fact is, if we're talking about something that needs someone to be at the bottom of it, that is a problem. That's a problem. Capitalism has never worked. Neither has socialism, neither has communism. With that being said, though, the point I was making is about integrity. When you have integrity, people don't know how to treat you. Hey, stop it.
No, why do I have to stop? You stop.
Because you're trying to keep it going. I'm letting it go, and you trying to keep it going.
Stop. He wants the last word, Corey, but go ahead.
It's the reason why you keep putting that. You put up all the things, right? You put up this comment about Ant that you put up twice already, right? I saw his comment. You don't have to keep putting it up. But he's making the same false argument you are.
It's not a false argument. You just
yes, it is. Listen, it's what the Republicans do. What about what he did? Come on, man.
I'm going on mute, Corey.
Please do. All right. So we're not arguing, doing this. Ain't arguing. This ain't arguing. This is me trying to educate an uneducated brother. This is not arguing. So we're not arguing. We do this all the time, though. We do this in person, by the way. So this isn't arguing. We're good. Anyway, with that being said, return on equity is what we talked about. I criticize capitalism, which I knew was going to set Kamari off. I'm going to always criticize capitalism because unless I have something that helps us all, I'm not with it. With that being said, does anybody have any questions? And if you do, you don't have to let us know now. You can join the village. Go to blackwealthrebels.com. Please go to blackwealthrebels.com. You see, he had to get that up. So building a product that helps men, that has nothing to do with the system of capitalism, though. Oh no, listen, Joyful. This is our norm. This is how we talk when we're in front of each other. So people could tell you this, like, by the way, in this documented. So this isn't an argument. This is light work, though. This is light work. We need to start calling each other names yet. By the way, in the village tomorrow morning in the village, there's a video dropping. It drops about 5 a.m. So it'll be there for you guys that are going to work. It's the audio of it as well as the video of it will be dropping tomorrow for those that are village builders. So go to blackwealthrebels.com, and that video is about 5 tyrants to the black community. See, look at it. He's still trolling, Corey. I know you can't see it. So he went from saying stuff to now Kamari's posted in the chat, by the way. I know you can't see it, Corey. He's trolling again, man. But it is what it is. Yes, Joyful. I digress. But go to the village, though, blackwealthrebels.com. Please make sure you do that. The video drops tomorrow at 5 a.m. We got a couple videos dropping this week. Also, for the camp, for those that are members of the village, all the members, paid, non-paid, the classes that we do for the students will be in the village. So week 3 will be in there probably today, actually. I'm working on it today, trying to get it up today. So that'll be there as well. So let's go to blackwealthrebels.com. With that being said, next week, Wednesday, we have Wealthy Wednesday. We'll be back on Friday for a Bitcoin giveaway. Saturday, we'll be back at week 4 of the camp. Week 4, we're talking about real estate and Bitcoin. Back here next Sunday. Friday, Corey and Kamari will be here. I'll be at the Nas show. You know what I'm saying? You'll see me on stage singing Whose World Is This at the Nas show on Friday. So I won't be here, but Corey and Kamari will hold it down.
Corey, how do you feel about that?
About the Nas show?
He left us. He left us to go to the Nas show. Didn't invite us.
Oh man, listen.
And we got
I'm
work.
I'm gonna keep it a thou wow. If it was like you know, if it was a Mob Deep show, I'm probably leaving your asses too. So I get it.
I mean, no. All right. So here's the thing, though. Mob Deep show in 2025, though. Like P ain't even here with us no more. Rest in peace to P.
No, I'm just saying. I was just giving an example of a group that I would, you know, or because there's no singular person that I want to see in concert, unless it's Marsha Ambrosius, because I love Marsha Ambrosius' voice. But
So,
besides Marsha Ambrosius, there's no single person that I want to see in concert.
I said last year, right? I got some folks who are on my short list of goats, and I'm gonna go see them because nothing's promised. So last year I went to see Stevie Wonder, who I think is the goat of all goats.
I'm not mad at that.
And this year I'm going to see Nas. So Nas and Stevie was on my list. Like they in a different sphere from me. So I'm going to see that. Cool. Dawn, shoot me a message. Let's talk. I got you. Anyway, man. So that's what our week looks like. You know, no system is good or bad. Those are human traits. Yeah, they all trash, right? So human traits, right? You know, I get you. I ain't mad at that. I ain't mad at that comment, Don. You know, but it is what it is. So yeah, Wednesday, Friday, Saturday, Sunday. So pretty much every week. Also tomorrow we're in the community too. 9:30 in the morning. We got a show. I said show like I'm performing. It is a performance though when I speak. We are speaking tomorrow morning at 9:30. Don't shake your head. We are speaking tomorrow morning at 9:30 in the community at where's it at? 8th and what? What's the address, y'all?
I don't know. Somewhere in North Philly.
Yeah, it's in the old Richard Allen projects.
No, it's not.
It's not that.
It's the John.
It's John Hartranft, I think it is.
Yeah.
Oh, Hartranft. I know what that's at.
Yeah.
It's at 8th. Let me tell y'all real quick. For those in Philly, y'all. 8th and Cumberland. We'll be at 8th and Cumberland at 9:30 tomorrow morning. Speaking to the kids in that camp. It's like, you know, they got a camp down there. So we're at the John Hartranft School tomorrow morning at 9:30.
And TC, that wasn't Lettucey, right? Lettucey is a group. Oh, you're saying she was with Lettucey?
Yes.
Not the group. Okay.
No, she was in Baltimore. She was in Baltimore to show Lettucey in
Gotcha. I was thinking Flow Tree, but I got you. You were saying they were together.
Yeah, they were performing at the same show.
Two amazing vocals.
Man, listen. If you don't know what Marsha catalog is, like you think like why would you want to go see Marsha Ambrosius? Her catalog is absolutely berserk, bro.
Yeah, because she sings at her live show, she sings a lot of stuff she's written. Right,
but I wanted to see her at the Lily in Philly at the Five Spot when they were Floetry. So I've seen her live in person and intimate spaces. She is amazing.
Yeah, her voice is something to be dealt with in person. Like there's a lot of people that can sing, and then there's people that can sing in person. Like when you hear their voice, it resonates. And she's one of those people. She can sing.
All right, man. So with that being said, man, now that I say that, we got a lot of stuff going on this week. So tomorrow morning, we're at the Hartranft Center. Wednesday, Wealthy Wednesdays. Fridays, Freedom Fridays. Saturday, we got camp. Sunday, we back here.
Yeah, we be grinding.
The work continues. The work continues, y'all.
Grinding.
But with that being said, please join the village, blackwealthrebels.com. Just go to blackwealthrebels.com. That's where all our conversations go. You know, we trade on a week. You know, that's where that goes on. Yeah, man. So we love y'all. Please stay safe out there. Join the village. You know, Black Queens forever. And we out.
Have a good one, y'all.